Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the numbers that shape our world and sometimes, well, let's just say this company's numbers have a story to tell, and it is a wild one. Get ready for Focus Universal Incorporated, their latest filing is out, and buckle up because it's a roller coaster ride through technology innovation and some serious financial tightropes before we dive deep into the nitty-gritty of Focus Universal's situation. If you love getting clear, no nonsense breakdowns of these essential corporate documents, make sure that subscribe button is hit and ring that notification bell so you never miss an episode. And hey, if you are looking for a place to chat about these filings and connect with fellow finance enthusiasts, our Discord community is linked right below in the description. Join us there. Alright, so Focus Universal Incorporated is putting out what is called a preliminary prospectus, and that is basically a heads up that they're planning some big moves. They're looking to sell up to 10558975 shares of their common stock. Now, this isn't new stock they're creating out of thin air. It is coming from existing preferred stock that investors are converting. Think of it as these investors are getting their chance to cash out. So what is the story here? Focus Universal is trying to raise capital through these investors who bought preferred stock, and now they're converting it into common stock to be sold. The company itself isn't getting any money from this sale, which is important to remember. The sellers are the investors. Currently, their stock symbol on the Nasdaq Capital Market is FCUV, trading at $3.65 as of the 15th of December 2025. Not exactly setting the world on fire, but it is a start. Now, every company has risks, but Focus Universal's risk factors section reads like a cautionary tale and adventure novel for investors prepared for the unexpected. They've got a history of operating losses and what they call a going concern basis. Basically, they're saying they might not be able to keep the lights on without more money, a pretty significant warning. Let's talk about their financial health. For the 9 months ended the 30th of September 2025, they reported a net loss of $3,923,401 and an accumulated deficit of over $29 million. That is a lot of red ink, and their cash flow from operating activities for those 9 months also shows a significant outflow. On the flip side, for the same period in 2024, they had a net gain of $144,127. This might look good until you realize it benefited from a sale of property and land which brought in $3,181,706. That is not recurring business income, that is a one-time event masking the underlying operational struggles. They're essentially selling off assets to stay afloat. Looking at their revenue for the 9 months ending in September 2025, it was $254,274. That sounds modest, but when you compare it to their cost of revenue, that is $237,754, that leaves them with a gross profit of just $16,520. For a company this size, that is barely anything to cover their massive operating expenses. Their biggest chunk of expenses here is professional fees at over $1.2 million and general, and administrative costs at over $1.2 million as well. Last year, 2024, was not much better. Revenue was $398,137. Cost of revenue was $387,936, leaving a gross profit of only $10,201. Their operating expenses were a whopping $6.2 million. Where is all this money going? Well, a big chunk of it, $1.6 million, went to professional fees and over $2.1 million to general and administrative costs. Even with the sale of a warehouse and land which boosted their other income significantly, they still ended up with a net loss of over $3.2 million for 2024. Their cash situation is also precarious. As of the 30th of September 2025, they had about $410,000 in cash, but they had liabilities of over $700,000, including accounts payable and accrued liabilities. That leaves them with very little working capital, a sign that they might struggle to meet their short-term obligations. So what is their big idea? They've developed a bunch of fancy technologies like a device on a chip, proprietary natural integrated programming language, and a universal smart instrumentation platform. They also sell some more traditional products like light meters and air filters. Their subsidiary AVX is also involved in smart home installations. Their goal is to revolutionize the Internet of Things industry. It sounds impressive, but the numbers aren't reflecting that innovation in terms of profitability yet. Let's briefly touch on their stock options. As of the 31st of December 2024, they had outstanding options for over 62,000 shares. Some have exercise prices well above the current market value of the stock, which means they're likely underwater for the option holders. The ownership structure reveals a lot. The CEO Desheng Wang owns about 30.55% of the common stock, and the chairman Edward Lee owns over 21%. Combined, they control over 49% of the company's outstanding shares. This concentration of ownership means they have significant control over the company's direction, which can be good for stability, but also means decisions might not always align with all shareholders' best interests. Now back to this Series B preferred stock. It is a bit complex. They're selling this preferred stock at a discount, and there are clauses about what happens if the stock price drops below a certain floor price of 78 cents. If that happens, they might have to do a reverse stock split, and if they don't, there are penalties called liquidated damages. It seems like they're betting on their stock price going up significantly to avoid these penalties. The key players in selling these shares are Great Point Capital LLC, Target Capital One LLC, and Secure Net Capital LLC. They're the ones who bought the preferred stock and are now looking to convert it and sell their common stock. The table shows how many shares they could get, and it's a substantial amount. How will these shares get sold? Well, the selling stockholders can use various methods, including brokerage transactions and private sales. They might even be considered underwriters in this process, meaning they're essentially acting like investment banks selling the shares. Diving into the footnotes, we see some important details. Their total assets as of the 30th of September 2025 were just over $880,000. That is a stark contrast to their accumulated deficit of nearly $30 million. It highlights the precarious financial position they're in. Their lease agreements for office space continue to add to their expenses. The auditors Weinberg and Company Par have issued a report with a big red flag. They state that the accompanying consolidated financial statements have been prepared assuming the company will continue as a going concern. This is a formal way of saying there is substantial doubt about the company's ability to stay in business. This is a serious concern for any investor. Looking at the balance sheet as of the 31st of December 2024, their current assets were about $3.8 million, but their current liabilities were only slightly less than that at $876,000. That is a decent buffer for short-term obligations. However, their long-term liabilities and stockholders' equity tell a different story with a massive accumulated deficit. So what is my take on Focus Universal Incorporated? They're clearly working on some cutting-edge technologies that could genuinely disrupt industries if they pan out. Their vision for IoT and 5G is ambitious. However, their current financial reality is a serious concern. They have a long history of losses, a dwindling cash balance despite recent fundraising, and a heavy reliance on selling assets to cover operational costs, not to mention the auditors' doubt about their ability to continue as a going concern. The significant professional fees and administrative costs also raise questions about operational efficiency. While the concentration of ownership by insiders could drive the company forward, it also presents governance risks. The complex preferred stock terms and the potential for dilution from future stock issuances are also significant considerations for any potential investor. Break situation, they need to convert their innovative technology into consistent profitable revenue streams very quickly or face severe financial challenges. It is high risk, high reward, but the current risk seems to be outweighing the reward based on the numbers. Alright, that is our deep dive into Focus Universal Incorporated's latest filing. What are your thoughts on their technologies, their financial situation, or their future prospects? Drop your opinions in the comments below. If this breakdown was valuable, please hit that like button. It really helps us out, and make sure you are subscribed for more corporate investigations. And don't forget to join our Discord community linked in the description for more in-depth discussions. Thanks for watching, and we'll see you in the next episode of Corporate Decoder.